Quick question. What do these things all have in common? Writing a symphony, brewing beer, flipping burgers, designing handheld furniture, and passing the bar exam. The answer? They've all been successfully accomplished by AI technology in the last year. As we kick off our latest market update, we certainly have AI on the brain, and we'll discuss how we are investing it for our clients. But first, let's summarize what we saw this year. Take a glance at what's coming in 2024, and then finish out with the key opportunities on the horizon with AI included. First, let's talk about 2023 with a specific reference to the S&P 500. This year has been a typical year for a late cycle. A lot of up, a lot of down, but we're landing in the same place. Inflation is being stubborn, and some days feel like Groundhog Day. We also have what we call a tale of two cities, with 7 residents on one side and 493 on another. You may be aware that the S&P 500 consists of the 500 largest companies listed on US stock exchanges. What you may not know is year to date through quarter 3, the average unweighted return of 493 of those companies is just under 3%. Pretty much flat, while the average unweighted return of the remaining 7 up over 87%. If your investments were not exclusively in these select stocks, you probably trailed the index. And yes, while that strategy would have worked for 2023 so far, too heavy of a concentration in those stocks is not what you want long-term from a diversification asset allocation perspective. So now, let's take a look ahead to 2024. At some point next year, we expect that the recession stage will officially start. Late cycle turns into recession cycle and then is followed by the recovery phase. When people think recession, they think market losses, but that isn't always the case. If you will recall, the market's always looking ahead 1 to 2 years. We believe that the market saw a recession coming and has already accounted for it with the difficult markets we saw in 2022. We expect this recession will be notably milder than the ones etched into our memory over the past 23 years. In fact, historically, mild recessions are much more common than the big crashes like the COVID pandemic, 2008 and 9, and the dot-com bust. The thought of a recession may seem daunting, but looking at this from both a historical and a glass half full perspective is that a recession is always followed by a recovery phase. Historically, recoveries see a reduction in rates, which spurs activity. Businesses can borrow and grow, and consumers are more likely to spend money. Cash earns less, so people want to use it to invest again. The recovery phase has historically produced the best returns of any phase of the business cycle, and that will be just around the corner. So now that we discussed recovery, let's take a look at the opportunities it presents. Artificial intelligence. Many believe that artificial intelligence will be among the most significant technology advancements of our lifetime. Bill Gates even said that AI is as fundamental as the creation of the microprocessor, the computer, and the internet. AI is poised for unprecedented growth. Its market is projected to reach a staggering $407 billion by 2027, after an estimated $86.9 billion in 2022. Among the fascinating trends we see with AI are its incredible speed of adoption and variances in use across so many industries. In simpler terms, we have fast growth and even widespread growth. ChatGPT is likely the most famous consumer use AI tool, which has garnered 1 million users within the first 5 days of its release, and 100 million in the first 2 months. That more than doubled the adoption rate of both tablets and smartphones. And businesses are buying into it. A significant 64% of businesses believe that artificial intelligence will help increase their overall productivity, with significant applications growing for healthcare, manufacturing, hospitality, IT services, and more. Even small businesses have adopted, with 91% of small business owners using AI saying it has made their companies much more successful. We believe that companies and industries that are quickest to adopt AI into their business model will achieve efficiencies and profitability inconceivable previously and will be a catalyst for the next bull market. That's why we are currently investing in AI through industry leaders like Google, Microsoft, and Meta. We're also taking it one step further by investing in companies that make the chips that power nearly every major AI program. So that's our update on equities. Where do we stand for bonds? This one is pretty simple, as we feel that we are in the same place we were the last time we provided our market update in April. To summarize, we think that bonds are poised for a nice year in 2024, especially if interest rates drop. I will recommend you check out our spring update for a full review on bonds and what to expect. Thanks for taking the time to catch up with us, and we hope that this gave you some valuable insight. To stay up to date on the latest research, be sure to follow us on social media or register to receive our weekly market commentary every Wednesday. As always, stay strong, stay smart, and until next time.